FICO, originally Fair Isaac and Company, moving lower in early trade this morning. That's after FHFA Director Bill Pulte tweeted he was not happy with FICO, responding to a post about the high cost of credit checks. Fellow consumer credit reporting agencies TransUnion and Equifax also pulling back after that tweet. But, David, that original response was one of the worst single days for FICO shares in about 2 decades.
Yeah, we saw that last week, and obviously, as you just point out, it hasn't gotten much better. Nvidia getting a boost this morning, though. That's the stock we're talking about there. You see it up almost 3% ahead of tomorrow's earnings report. The company reportedly working on a lower-cost Blackwell chip for China. That's according to Reuters. Joining us now is Cantor Fitzgerald analyst C.J. Muse. Has a buy rating on Nvidia. His price target, $200 a share. So suffice to say, he's bullish. You know, a lot of focus going to be, CJ, on the guidance, of course. You are looking for a guidance for this quarter or the July quarter to be much better than feared. Why?
So, I would say that the execution of the supply chain for the full system racks coming out of Asia has really accelerated in a positive way in the last kind of 2 to 3 weeks. And that really gives confidence that the Blackwell product cycle in the July quarter will truly ramp. Obviously, the offset there is the H20 embargo to China. And so I think the buy side is thinking, anywhere from 43 to 46 billion. We previewed 46 billion guide, given the strong execution from the supply chain. I would say that I think anything over 45 would be well received and would likely highlight sequential growth, which I think would be a clearing event. And then very importantly, very strong growth in the second half of the year, where we think the underlying demand trends would support 50% half-on-half data center growth. And if we get any sort of inkling from management that that's what's coming, then I think the stock pushes higher for sure.
Yeah, well, the commentary out of the hyperscalers around earnings certainly shouldn't dissuade people from believing that. But what about China? You talk about almost the loss of $15 billion in data center revenues as a result of the H20 no longer being available. They took the $5.5 billion write down. But can we expect to get any clarity from them on this call around what they expect in terms of Chinese demand?
I doubt they would pre-announce here before, speaking with Washington, D.C. and the administration. I think that they will highlight the view that, as they've made abundantly clear, is that this is a real negative, call from the U.S. government in the sense that, we're taking away billions of dollars. We're bringing scale to the local players in China. And as they scale and benefit from the purchases there that should have gone to Nvidia, that's going to help them develop the software as well as the hardware to become more competitive to Nvidia. I don't think they'll catch up, but a more competitive player in China selling elsewhere outside of China to some of the other kind of tier 3 countries, is not a good thing, I think, for the competitive landscape for AI and for the U.S. to drive that. So I imagine they'll speak a bit to that, but I don't think they'll talk directly to whether their new Blackwell offering will actually be approved.
Shorter term, CJ, I wonder, is this particular print any harder to handicap than ones we've seen the past few quarters? And is the stock running hot into it or not, do you think?
Is it difficult to handicap? Absolutely, in the sense that, we've got to take $15 billion of China out. I took $5 billion out of July. If it's 8 or 9, then obviously I'm wrong, right? And you could see further weakness. But I think the good news is, clear visibility to acceleration into the second half. And so if we do see a miss, I think that's the bottom. What else are you planning for on the short side? And you've got, the supply chain executing. You've got China completely de-risked, and you've got a very strong, second half ramp. And the stock, just turned positive year to date. And you've got real positive earnings momentum into the second half of the year. And so, even if they do miss, by $1 billion or $2 billion, I would suggest the stock would get back to where, we started the day, within a day or two. So, I do think that risk reward heavily favors being long here. And, over the next 3 months, I would envision Nvidia being, the top performer here in semis as, AI is truly the one part of the market where you have legs to growth in the second half, whereas, we're worried about elsewhere in semis, pull-ins related to tariffs. So, this is still the right place to be in my view.
Yeah, well, your earnings expectations for this year and next and your price target obviously reflect that. CJ, thank you.